All right, are you recording this?
I just started right now.
Okay. All right. Hi, everybody. Welcome back. Today we're going to talk about accounting and finance, which I know for most of you is probably not your favorite topic. And I bring this up within the accelerator space here because it is an important topic. It is something that if you're not comfortable, if it's not something you lean into and go, yay, it's time to do accounting, I'm going to show you a way to do it that's going to make it easier for you. If you are someone who dives in, who says, yeah, accounting, I'm still going to show you stuff you haven't seen before. And hopefully by the end of this, you have a better understanding of how to track money, how to run a business using numbers. That's really what it all comes down to is if you're going to grow your business and make it much bigger than it is now, 10 times bigger than it is now, you're going to need to know how to run your business using numbers instead of gut, right? The opposite of that is to just feel where you are instead of computing where you are. And you can find this online. The full lesson here is sitting on my website. It's free for everyone to read. It's called Forget Accounting, right? So it's lunarmobiscuit.com/forgetaccounting. And I call it that because I'm not trained as accounting. I've never actually taken a class in accounting. I do accounting for something like 16 companies. I have a whole bunch of companies that I run. But I know how it's done by doing it and getting feedback. I don't know how it's done by like reading a book. All right, the first thing to know about accounting, really simple, accounting 101, is that you have to keep track of everything. Amanda, can you go and hit mute on the people who've unmuted themselves? I hear Pamela's background. All right, so first thing you need to do in accounting is to keep track of every transaction. Every time money moves inside or outside your company, you keep track. You make a list. Ideally, you make it in either a piece of accounting software, which is a good solution, or you can just do it in Excel, right? Do it in a Google Sheet or do it in Excel, which is what I do. Right? So I don't use any fancy accounting software. I literally just use an Excel spreadsheet. All right, and on that spreadsheet, the list of all the transactions is called the general ledger. I'm going to try and use as little jargon as possible, but that one's, you can just call it a ledger, but the general ledger is the one where you put in your transactions. So here are, what do we have? Six sample transactions, or 5 sample transactions, in fact, because the first one is just the starting balance. Right? How much money was in the bank the day you started accounting for it? And ideally, you do this at the beginning of the year, right? Most companies run the accounting year the same as the calendar year. You may not. Your accounting year and calendar year may vary, but most companies out there just use January through December. So go and do this. I actually suggest this as the homework assignment is to go and get every transaction you've done this year sitting in a ledger, right, by the end of the week. And so the first transaction you would have is just how much money was in the bank at the beginning of the year. Hopefully you have a bank statement for that. If you don't, you can go back to the bank and you can ask them for what the balance was. And then for each subsequent transaction, it either goes in or out of the bank account. Right? There's words for that. There's jargon words. I don't actually use the jargon words. Right? In or out of the bank account. So we have a date. When did it happen? We have a code, a type of transaction, so we can do some more processing on this. We have a description to try and remind us of what happened. Who gave us the money, or who did we send the money to? How much came in or how much came out, one or the other, not both. And then the balance is just the updated. It's just the previous balance plus in minus out equals balance. That's it. And then we keep going down, and the next one's rent. We did some travel. We sold some stuff to a customer. We did some consulting. And we generate a general ledger. Now we have a list of everything that happened in the company. And if that's all you do, that's pretty boring and useless. Right? So it's not totally useless. You could hand this to an accountant and they could do something with it. But the next thing you do with this is compute what's called a profit and loss statement or an income statement. And the nice part about doing this in a spreadsheet is that it just takes some formulas to do this for you. You don't have to sit around and take a calculator and run through and try and add these things up. The spreadsheet will do that for you. So in this little P&L here, we have 2 types of revenues. So the way that a P&L is always shown is revenues at the top It's kind of two chunks of information. Top chunk is revenues. Next chunk down is expenses. And then on the bottom, what's called the bottom line is the difference between those two. So here we have some revenues. We had two types of revenues. We had customer revenues and consulting revenues. You can see these words in all caps match the words over here in all caps. It's just any word you want. It's just an identifier. I like to use little English words or abbreviations, no periods, no spaces, all caps, small letters. That way the computer can find it again. So we had a total of $1,500 of customer revenue here, $500 of consulting revenue. Total revenues was $2,000. The spreadsheet again is computing that. And then here are the expenses. I'm just listing 4 different categories. Only 2 of them showed up in those 6 transactions. That was $1,000. And then in income is 2,000 minus 1,000 is 1,000. Right, so those are the formulas. And you can see here, this is the formula you would use in Excel or in Google Sheets. And it's really just 2 different things, right? So either it's, well, 3. It's sum. So sum is just adding up everything in this range here. And if you don't know how to do ranges in Excel or spreadsheets, if you don't know how to do, if this all looks total gibberish to you, go on to YouTube, ask it for a class in accounting, and go watch that. Or sorry, go watch a class in spreadsheets and go watch that first. So you do need to know how to use spreadsheets as an entrepreneur. All right, so sum is just adding things together. One that you've maybe not seen before is called sum ifs. Sum ifs is this magical formula, which is basically all of my spreadsheets. All of my business spreadsheets are sum ifs, a whole collection of sum ifs. And sum ifs is just saying match something. So I'm going to go look through the general ledger in column E. In column E, if we just go back a little bit, is A, B, C, D, E. We're going to add up the things in the in column. And we're going to add up the things in the in column if and only if this matches what's ever in the B column. Right? I'm not showing the whole formula here. And the same thing down here, we're going to sum up everything in this case in the F column, which was the out column, if and only if this part matches. That's it. Once we can do that, then we can make it a little bit more complicated, and we can do it based on dates. So we can do a sum if, and we can add in some ifs. Lets you do more than one if statement, and we can add some ifs in there that check to see if it's specific to the month of January, the month of December, maybe the first quarter is in there, maybe just the whole year. But now we can start to take subsets of that general ledger based on time, and we can pull out those information. And once we can do that for every month of the year, and we can start to see what this company looks like on a monthly basis. And once we can do that, we can start to look at the differences between the months. We can start to look at the ratios between the numbers, and we can start to do some analysis to see how this company is doing, like in terms of money, right? And if you run out of money, right, here we're running negative. If we're running out of money, we still have some money left in the bank, but if it goes to zero, the company's done. Right? You can't run a company with negative money in the bank. Banks don't let you do that. So again, once you can do months, you can do quarters as well, and you can do quarters off of the same general ledger. You just do different sum ifs. You can make a different tab in your spreadsheet with quarters. You can make a different tab with years. Here I'm showing comparing year over year. We have the current Q1. We have last year's Q1. Now we can do simple analysis. What's the difference between the two? What's the ratio between the two? And we can see what's growing and what's shrinking. And again, we can do years as well. Once you have this set up, and if you go to that website, you'll actually have an ability to download the template that lets you start filling that out. Once you start doing that, and it's become second nature, and you just always put in the transactions for the day, or you have a bookkeeper put in the transactions for the day, and you just look at the summaries. Once it becomes a habit, to keep track of these things, it becomes an addictive habit, because now you want to know what the information is. All the time for me, it pops up like, how much money has gone out in such a form. Well, I just pop open the spreadsheet. I go to the P&L tab, and it's right there. It literally takes me like 10 seconds to answer the question. And so I get to answer a lot of these questions almost every day. I'm looking at one of these spreadsheets trying to answer one of these questions. And it's just part of my habits. It's just the way I run my companies is to do it off of numbers. And once you do that, you can start to pull this into your Tuesdays. So if you remember, I taught you about this idea of changing things on Tuesdays. Okay, well, one of your goals might be to change one of the ratios you compute out of your accounting. So maybe you're spending a large amount of money on marketing, and you're noticing that the growth rate of marketing is not matching the growth rate of sales. So you should, have a measure of that difference and have a hypothesis for how to improve that, and go and fix it. On a Tuesday. And hopefully 2 Tuesdays later, you notice a difference, or 4 Tuesdays later, you notice a difference. Maybe you're noticing the opposite. Maybe you're noticing that you spent twice as much on marketing and you had 4 times as much revenues. Even better. The question is, can you keep that up? Right? Can you take your profits and put it back into marketing? Like, what's the best use of your money? Is it another truck or a first truck? Is it more marketing? Is it doing something to lower your costs? Like, as soon as you know the numbers, you can start to have hypothesis for how to improve your business. So if you go to this website, and you can do this right now, lunarmobiscuit.com. I know it's hard to spell. Amanda will be happy to put it in Amanda or Sam will put it in the chat window for you. If you go there, you'll find this accounting template. You download it. You can customize the categories to whatever fits your business. None of my P&Ls look the same. They all have slightly different categories. You customize the date ranges. I made this, I don't know, a year or 2 ago. So the date ranges are going to be in the past. You just put January through April for Q1. I tend to do quarters myself. Put, January through March for Q1, and April through June for Q2. If you want to do months, you can put in the month dates. Go back in time and start filling out the transactions back from January, and you will have an up-to-date P&L when you finish doing that. All right, moving on to the next topic, related topic, but the next topic is called financial reports. And so once you have this information sitting in this accounting spreadsheet, you'll be able to answer the questions that the investors and the banks and the grantors and others who care about money will be asking for. They will ask you for your financial reports. And if you don't know this term and you don't know what they're expecting, well, let me explain it to you. There are 3 key financial reports, and they have different names. There's lots of names in this space. There's the P&L, which I just showed you. It's also called the income statement. There's the balance sheet, which is also called the report of assets and liabilities, but it's more commonly called the balance sheet. And there's a third one called the cash flow statement, or the statement of cash flows sometimes. Those are the 3 key financial reports. When someone says, send me your financials, they either mean this or they mean your forward-looking financial model, one of the two, depending on the context. But more often than not, they mean send them this information and then send it for. If you're not speaking, please stay on mute. All right. If they're asking this and you're talking to the bank, they're probably asking you for these statements. And what they want to see is last year and the most recent quarter, or maybe even the most recent month. And again, if you're doing your up-to-date accounting on a daily basis, it's not a problem. You click a button and it's right there. All right, so this is what it really looks like. This is an actual P&L from a real company reported to me, in my work. I believe this one's in Tanzanian shillings, given the size of the numbers. And this is really what it looks like. So we have revenue at the top. They earned 162 million shillings in June of 2018. This one's a little old. Move this out of the way so I can see it. And they also have April of 2018 reported here. And I don't know why it's June and April. I have a lecture on this where I explain what's wrong with these reports, but I'm just going to walk you through what's right with them today. So we got 2 months. April's bigger than June, which is weird, but okay. We have net sales, right, which is the sum of everything reported up here, which is the same number over and over again. I will complain a little bit about this one. We have the cost of sales. How much did it cost to produce a unit of sale? So this is also part of the P&L. So you have your top line revenues is all the money that came in from customers. If you get grants or investments, it shows up somewhere else. So what came in from customers? What did it cost you to produce those goods that went out to the customers is cost of sales. That's all the parts and all the labor, and could be transport, and it could be the box that it's in and the package it's in and so forth. That would all go in cost of sales. And then we have either what's called net revenue or gross profit. It's the same thing. It just has two names. And that's just the subtraction of top line revenue minus cost of sales, which is usually a positive number, not a negative number, but whatever. So we get the gross profit number here. And then we have the expenses needed to operate the company. So this is everything else that's kind of also called fixed expenses. This is everything that you spend on a weekly basis or a monthly basis or a quarterly or annual basis to run the company. And then you get operating profit or net income or loss sometimes, which is just your what's left over from revenues after cost of sales minus your fixed expenses is basically what people would call your profits. This one doesn't, but that's often what people call profits. Then taxes come after that, and you subtract that out to get a line. But this is usually the bottom line that people talk about. Here's what a balance sheet looks like. A balance sheet balances it has two sides, and they have to balance. They have to come up with the same number. Usually it's left and right, but on one side you have all the assets, everything the company owns. So how much cash is in the bank? How much property and equipment do you own? Any inventories? Any accounts receivable? Anything people owe you? That all goes in one bucket, and you add that all together, and that's how much stuff the company owns. And then on the other side, which is usually the right side of the balance sheet, but here it's underneath, is everything you owe. So in this case, there's much in here. There's some liabilities. So what do you owe in terms of debts? What unpaid bills do you have? There's some other stuff in here. And then to balance it all out, there's one line in here, which is basically the equity. How much is left over? Whatever's left over, whatever is, you have the number from the left side minus the numbers you owe. Whatever that number is, that's what you own as an entity. It's not a very useful number for startup companies, but that's just the way balance sheets work. They have to balance. Again, I can hear someone in the background who's not muted. Okay, and then the last statement is called a cash flow statement. And while I've heard some people use it, I've been an entrepreneur for 29 years, and I have spent maybe 5 minutes looking at cash flow statements in 29 years. It's supposed to show you how the cash changes in your company, but there's a better way to do it, and I'm going to show you how that works in a little bit. There's a fourth statement that I find actually to be the most useful of all the statements. And so the fourth statement doesn't have a name. Sometimes people will call it the budget. Sometimes it's the actuals. It's a spreadsheet that shows you the difference between what you expected to happen and what is actually happening. And so it runs like this. So what's really nice about this one is that the very top of the spreadsheet isn't how much money came from customers. I often like to say that the spreadsheets have to tell a story. And that confuses a lot of people because they've never curled up in bed with a spreadsheet in order to get a story, right? You curl up with a book to get a story, or these days maybe a podcast or a YouTube video. But spreadsheets can tell stories too. And the way the spreadsheets tell stories is you start at the top and you just work your way down, and the story unfolds. And so if we just run back to the P&L here, this story is 162 million shillings fell out of a tree. And it cost me 60 million shillings to pick up the money. So I was left with 102 million shillings at the end of that part of the end of chapter 1. Right? In chapter 2, I had to spend 50 million more shillings getting this money to the bank. And so when I was all done, I had 51 million shillings left. Like, it's not a really good story. It doesn't give us enough details. It sounds nonsensical. Whereas this story is, I sold 8,410 units. On average, and it doesn't tell me the average, but I can eyeball this and say on average, it was like 2,200 shillings per unit. and the total sales were 162 million shillings. Right. So the stories now is how many units, what was the price per unit, and what was the total amount of sales from that. That starts to be a logical story, and it starts to provide us the information we need to again help analyze the business and understand what's doing. Because if we went back and did the head-to-head comparisons month to month, well, if the revenue number goes up, why did it go up? Like that should be the first question you have. Did it go up because we sold more units, or did it go up because the average cost per unit went up? Right? How you run your business is going to be vastly different depending on whether your unit sales are growing or whether your price is growing. Because often prices tend to go down, not up. So if prices are starting to drop and your sales are starting to drop and you're selling the same number of units, that's a bad trend. But if you're selling more and more units each month, that's a good trend. Right? So you want to know these things and you need to mark them down. So when you do your P&L, you can do units as well. And then we have cost of sales, and the oddity about this one is we're not seeing the unit cost per sales, which ideally we should. If we scroll down further, we get to that gross profit line, and then we get a ratio that's really important. The ratio is what's the difference? What's the rate? What's the I forget the math term. Simply divide the gross profit or the net revenues, whatever you want to call it, the gross profit by the total revenues. And that will give you a ratio called the gross profit margin, or usually just called the gross margin. And the gross margin tells you what percentage of that revenue, of all the revenues given to you by customers, what percentage do you have left over to run your business, right? After you spent all this stuff on building the product. This is a really high margin company, right? Usually when you get to this number, it's going to be, 40-ish%. Maybe 30%. But in agriculture, it might be a little lower than that. It's hard. It's much easier to run a company with a high margin. So again, back to Tuesdays, if we're tracking this, you can see here the budgeted number was 51% and the actuals was 62. So that's celebratory news. If it were the other way around and our gross profit margin was 42% instead of 62, and we expected 51, well, we should do something about that. We should figure out why it's lower than we thought. We should understand that based on the numbers that we have here. We may have to dig in and get some more numbers elsewhere, like the details of the cost of sales. And we may have to do something about it. We may have to do a Tuesday experiment to figure out how we can get the margins up, because if you're running at 42% or 32% or whatnot, you might find out you're unprofitable at the end of the day. If we scroll down further, we get to those fixed expenses. So here's a bunch of different fixed expenses. And now we have some details to it as opposed to the previous reports, which were just not enough details. And we can see what we spent on rent and people and utilities and onward. And in this case, we're comparing between actuals and budget, which again, line by line, you should go through this at least once a quarter to see how you're doing against what you thought you were going to do, and learn from that. You're probably not going to get any of the numbers right, but you can learn from that and figure out which ones are important to fix. And again, this is what Tuesday experiments are for, to help fix these things. And then at the very bottom, we get the operating profit, which is, again, the net revenues minus fixed expenses, or gross profit minus expenses. And then we can compute another ratio. And this ratio is this operating profit divided by the total revenues. And that gives us what they're calling our operating profit, also called net profit. They're computing the net profit after tax, but I always compute it before tax. I got no control over taxes, so I'm just going to pay whatever I owe on that. But this line here is going to tell me what percentage of that revenue is profits. What percentage of every dollar or shilling or cedi or naira or whatever I'm bringing in, for each unit of currency that I bring in, what percentage of that do I get to keep as profits, right? And so anything positive is good, bigger is better. In this case, they were expecting 12% and they wound up with 31. That's awesome. I would still dive in, which I did, and figure out why. Why was the profit margin so high? Was that a one-time thing? Is this to be expected? What did we learn by getting a higher profit margin than we thought? And how do we keep it that high? And then a couple other anomalous things on here to complain about is you can see how hard it is to read this column versus that column. And the only reason is that this column has odd amounts of, it's missing commas here and there. Not every single number is indented the same amount. This one has pennies. Nothing else has pennies. Nothing else should have pennies. It's just, you should actually sweat the details and get all the formatting the same so it makes it much easier to read. I can also see that like this line's bold. It's bold because it's a sum. It makes it easier to read. It pops out. So, as I'm saying this, there are a few things you should not do on financial reports, little things, or some big things. Like here's another P&L. Here's a P&L that gives us basically no information. We know what the top line revenues are. This one's in Ghanaian cedis. We know what the top line revenues are. Here's what's supposed to be cost of goods, but it's almost everything. We have some notes. So the notes are supposed to tell us what's, the notes presume will tell us the rest of the details, but I would rather just see them, or at least some details here. We got this number. It's not labeled, but we know it's net revenues. We have some expenses. We have something labeled financial bank charges. I don't know what that is. And as you'll see, if I show this to you, note 5 doesn't tell us what it is. But at the end of the day, we had a profit for this business. So I guess we're a little bit happy. When we go to the notes, note 2 literally doesn't tell us anything. It does tell us it's shea butter, so it reminds me which company this is, but it doesn't tell me anything more about the sales, like how many units or what did we sell per unit. It doesn't give us any information that would help us run the business. Note 3 is a little bit more useful. It does list some stuff out here, but some of this doesn't belong up in the cost of goods. So maintenance doesn't belong in cost of goods. This is only things that are strictly important to producing one more unit. So if like you have to fix a machine, fixing a machine doesn't create one more unit of, in this case, shea butter. So that belongs in fixed expenses, right? It might not be fixed, they're operating expenses, right? It belongs down in the other part. Same thing with marketing and branding. That doesn't belong up here either, unless that's the label on the package. It might be in this case, but this is again supposed to be one per unit. If it's affecting one unit, it goes up here. Otherwise, it goes down in the other section of expenses. Here are the other expenses. We have a separate line for repairs and maintenance up down here, which again kind of shows you where it's supposed to be. And we have here we have fuel and transport. That may belong up in the top section, right? That's arguably it requires all the transport is probably in order to deliver the product, and therefore it's part of the cost of goods. And then when we get down to the bank charges, all we know is it has something to do with interest. Maybe we're paying interest. Maybe there's a loan out there, but we don't know because we weren't given enough information. So this is a really good example of a pretty bad P&L, or pretty useless P&L, but it's a real one, and it was signed by an auditor, and it was submitted to the Ghana government as part of the taxes. And so this is what real ones look like. It's just not one that's useful to running a business. All right, so a couple other no-nos, right? First one I showed you there is don't put nothing in your notes. Like if your accountant gives you this, because a lot of most places in Africa require audited financials, so you're probably going to have an accountant who's going to produce these for you on an annual basis. If they give you one like this that has no information in the notes, just yell at them. Literally, you have my permission to go back to them and say, what's the point of having a note that has no information in it? Like, give me the rest of the details. If you can't see units sold and the average units, sorry, try that again. If you can't see how many units you have sold or the average price, then either you didn't give them that information to produce that part of the report. You need to find a way to do that. Those are two key numbers that you need to track inside your company. I explain what cost of goods are, fixed expenses, and then compute the margins. Compute those margins, both the gross margin and the net margins. Pick one that you want to help make bigger or not make smaller, and manage manage your way to do that. In the end of the day, the whole idea here is to compute whether or not you're profitable, and if so, how much. You want to know whether or not, early companies often wind up burning cash. That's the term of art. Burning cash is in spending money on purpose in order to grow the company. Working on spending, like having a focus on spending in order to grow, as opposed to a focus on managing in order to have profits. Those are two different paths that companies can take, especially when you get some investment capital. Like if you're here and you're doing the homework, you're going to get a $5,000 grant. What are you going to do with the grant? Are you going to use the grant to, are you going to burn the grant, right? Not literally, but are you going to burn the grant on something that's going to grow the business? Or are you going to stick it in the bank and use it as a rainy day fund for things that go wrong? Right? Those are your two choices. You can do whatever you want with it. I'll bet you that 99 out of 100 of you burn the money to go get bigger. Right? That's typically what's done in early stage startups. If you want to burn more money, if you want to grow faster, you got to raise some money. And then the question is, how are you going to raise the money? In Africa, the most common way to do that is in debt. Well, if it's in debt, that means the interest rate that you're paying is going to come out of your margins. So you need to know what your margins are. So you need to understand how much debt you can afford to take. If you're going to sell equity, that's a different story. But the equity investors are going to want to know how the company's doing and where it's going. And so they're going to want to see this as well. Right? Answering the question of how much money you need to burn in order to get to wherever you want to get to, that can be done in one simple spreadsheet. So this is my innovation to accounting. This one spreadsheet, it looks a lot like a P&L, but it keeps going after the bottom line. So it's too long to fit on one page vertically, but it's one long vertical report that looks like this. So it starts with revenues, just like a P&L. I just call it a P&L plus. So it starts with revenues, but in my P&L, the first line, the top line of the revenues is not currency. The top line is units, like you saw in that one report. So how many units got sold? What was the average cost per unit or price per unit? And then compute your gross revenues, total amount of money that came in from that. Sometimes you do that by multiplying these two together. Sometimes in reality, what happens is you know how many units you sold and you know how much money you made, and you compute your average revenue from that. So you'll have 2 out of 3 of this information. You compute the third one. Then you have cost of goods. Again, I explained that 3 times already. I'm not going to do that again. And you wind up with net revenues. And again, these things have lots of names, but these are the names I like. Then you have that block underneath there of all the operational expenses. So this is just whatever you spend on a weekly and monthly basis to keep the company running. And you sum that together. And then in the middle of this report, you wind up with what's usually called the bottom line, which is net income. So that's, again, just net revenues minus operational expenses. You get net income or loss. Right? Sometimes you'll be losing money, right? Especially if you're just trying to burn it to grow. You might be spending a lot of money on marketing, which would show up here. You may be just underpricing your product just on purpose in order to sell more too. That's not an uncommon thing to do with given enough capital. Okay, then there's a section that comes underneath the net income. Underneath the net income in this version of this report that I'm innovating on is called capital expenses. So normally this would go off on the cash flow statement and show up a little bit on the balance sheet, but I like to put it here because this is the other things you're buying. Especially you're going to be given $5,000. You may be getting more, right? We have some other money that we're going to be handing over to companies in some form. And you may want to go buy a piece of equipment. You may want to go and drill a borehole. You may have other things. You may want to buy a truck, right? Or a building. Those are capital expenses. So this is things you spend money on that still exist and you still get benefit from after this month and after this quarter and hopefully after this year. So long-term expenses, that's a different thing than these operational expenses. When you hand some money to someone for their salary or their wage, at the end of the time period, whatever time period you're paying them, it's gone. Same thing with the rent. You pay the rent on a monthly basis. You don't get to stay in the building another month until you pay another month of rent. Whereas when you build the building, it's your building, you own it, and you can stay there as long as it exists. So that's a different kind of expense. So different block for capital expenses. And then we have a section. I said the grants don't go up in the top. The grants and the loans and any equity sales, they go in this block down here. This is cash that comes into the company or out of the company that comes to and from investors or grantors. And so there's just a block of cash change or investment capital. And then you can compute how the cash changed across the entire business for that time period, the month or the quarter or the year you're computing, which is just your net income. So it's, revenues minus expenses is net income. Net income minus whatever you spent on capital expenses, plus whatever came in through investments. This is netted out because there's some out in here. But whatever came in from investors or grantors, that's your net cash. And then what's most important to this spreadsheet is at the very bottom, you can compute how much cash should be in the bank. And that's just the money that was in the bank last time period, plus whatever this net cash is. And so it looks like this. And again, this is in the download. I think this is in the download on the Forget Accounting. If not, you can just make one of these. Just come back to the video and or take some screenshots here. So again, we have revenues at the top, number of units, average price per unit gives us gross revenues, average COGS per unit, ideally, gives us, then we can compute the total cost of goods. And again, you might go backwards from this. You might know what your total cost of goods are, and then not know the average per unit, but you can compute that if you don't have that here. And that gives you net revenues. And I'm showing you what the formulas are for each of these. And then if we scroll down again, now we have all the things that are fixed expenses, salaries, rent, utilities, travel, and so forth. And we can sum that up. And then we have our net income line, which is just those two subtracted. And then capital expenses. So how much did we buy on trucks? And this will be blank for most of the month, most of the year, but that's fine. Right? What other equipment? We wouldn't say the word equipment. We would list out what it is. Right? We'll have more lines if we have more capital expenses. It's good to see, how in the long run, you will have more than one truck. So in the long run, it'll be nice to be able to see how often do you buy a truck? Is that time period, shrinking? More analysis like that is useful. I did a really short version of investor capital here. It's just how much equity came in, how much loans came in, how much repayments went out, and net cash is shown here on the sum of all these things. Right? Some things are positive and some are negative. You got to get that right. And then at the very bottom, we have the cash balance, which is just the previous cash balance plus this net cash line. And once you fill this in, you can do this again per month and per quarter and per year, and you'll have a financial model. And that financial model will show you how much money you need in the business in order to do whatever it shows on here. This is your forward-looking financial model, right? What I was showing you earlier was your historic-looking accounting reports or financial reports. What you need to do as an entrepreneur is look forward as well. You need to be able, if I were to invest in your company right now, I would ask you, what are your 2020? What is your goal for 2021? What are your revenues going to be? How many units are you going to sell? How does that compare to last year? What's the growth rate? What are your margins? How are the margins going to change over time? Do you have any big expensive things to buy this year? I'm going to ask the questions that are sitting in this report, and I'm expecting you to be able to answer them not just verbally, but by handing me an actual report, an actual financial model that looks forward, and not just 2021. The norm is to look out at least 3 years. So I want to see a report that's 2021 and 2022 and 2023. And sometimes we'll go a little further. Sometimes we'll do 5-year reports. If the company is going to burn money for more than 3 years, we would ask for a 5-year report. For African companies, that's pretty uncommon. Usually we just look out 3 years as plenty. African companies tend to be profitable. So when you're creating these things, there are some other details that are important, like don't show the decimal values. Don't show anything under 1 unit of currency. It's really rare that ever becomes important anywhere. Make sure there's commas. I know there's multiple ways to do commas based on the English and the French speaking parts of the continent. Just whichever one is the normal one you use. It could be spaces or dots or commas, whatever. Just make the numbers easier to read, especially in the currencies where we're going to be looking in millions and billions. Personally, I like it when currencies have a symbol in front of them. Part of that is a bias because I'm American and we have the S with the line through it. Most of the currencies in Africa don't have a symbol. It's just much easier when you're looking at these financial reports to be able to say that's money and that there isn't money, it's units. Like how many people work for the company isn't a currency. How many units sold isn't a currency. And so if you don't have a currency symbol, I often just will use the rupee symbol and just throw that in front, or the yen symbol, because nobody's spending yen in Africa that I know of. Just grab another symbol from another currency and use that. It helps make things clearer, at least to my eyes. I showed you some reports where some of the numbers were negative. I don't know why accountants do that. I like it where, and it's rare when I see that. I like all the numbers, all the sums to be positive. That way, when there is a negative number, it's glaringly obvious. I like it to show up in red, which is one of the options in Excel and Google Sheets. Then the negative numbers pop out, and the negative numbers are bad. So negative numbers, if expenses are a positive number, if loan payments are a positive number, cost of goods is a positive number, right? And you're subtracting where you're supposed to subtract. Then when you have a negative number like net income and it's negative, well, that's really a loss. Or net cash and it's negative. Well, you've lost cash that month. Then it's really obvious. It pops out and you can not overlook it. So I find that to be really important. I already told you, compute your gross margins and your net margins. And then there's one more trick, which is important when you start to talk to investors, which is almost all investors are in Africa invest in dollars. Most of the money flowing into Africa is foreign money. And whether they're from the US or Europe, they tend to invest in dollars. Some of the Europeans use euros. Occasionally, you'll find British pounds. But the flaw we have as foreigners investing in Africa is we can't think in your local currency. When I see Kenyan shillings, it's got too many zeros in it. Like it looks like dollars it looks like pennies, but we don't usually do pennies. We usually do dollars in the US. So it's off a bit. When I get to Uganda and Tanzania and Ghana, I get totally lost. I can see what the number is, but I can't visualize how much money it is. So what I do, the best practice I have is I take their financial spreadsheet as is in their local currency, and then I make a copy of that tab, and I have the whole tab converted over to dollars. I just go cell by cell and put a conversion factor at the top, and everything that's a number just gets pulled over and divided by that number and turned into dollars. And the nice part about that, and I won't go through this in detail, but the nice part about that is that we can pull up the same spreadsheet because they're identical, right? They're identical in format. And I can turn to you on a phone call and say, hey, if we go to, let's say, column C, row 24, this number looks weird. And you look at the number and you're looking in your local currency, and I look at the number and I'm looking in dollars. And we both have a nice mental map of what that means. And we can have a conversation about the values without ever mentioning the numbers. And so that's a useful thing to do, especially with foreign investors. Oh, and with that is the end of the show here. I'll open it up to questions.
And while we're getting some questions, I wanted to put in the chat box this fun poll that we came up with. So if you guys can just take that poll really fast, we'll share the results after a few questions. It's asking about your thoughts about financials so far, how this presentation kind of left you feeling, as well as who keeps track of the records in your company. So go ahead and check out that link. And we also have had a few people writing, so I'll just address it while I'm speaking. They said, where can I get the templates to do this kind of work? Well, the great thing is that it's on that Lunar Mobiscuit link that we've pasted in the chat a few times. We're going to also put that in the Mighty Networks. And so this link, again, that I'm going to put right now, it's pretty long. You'll need to read it. You might not be able to read it right now while we're on this call, but this is the great thing, is that you've got more tools to help you as you go forward to take these concepts. And you'll notice that at the end of this blog post that Luni created called Forget Accounting, you will see a link to download an Excel sheet that has everything that Luni has spoken about.
It has the opening part. It does not have the financial model on purpose. So what I found is, if anybody downloads it for the forward-looking financials, there are a ton of templates on the internet. What happens that I've seen over and over again, dozens and dozens of times, maybe 100 times now, is if you go and download someone's template, you won't understand how it works. You'll start filling it in, and it will have some oddities to it, and you won't be able to answer the question of why. Like if I say, what's wrong with cell C24, you won't understand. Often you won't understand why the number is in C24. So for forward-looking financial models, I've shown you what it looks like, but I highly suggest that you go create one from scratch, because then you will know what's in every cell and why every cell has what the number that's in it. You'll understand better how the money flows through your company. You're welcome to take. You should post a PDF to the group as well. So take a PDF of this lesson. You're welcome to take the screenshots of the financial model and make one that looks similar to it. But you got to do it from scratch. Otherwise, you really won't understand it completely. And I have seen this. I've been through this as an entrepreneur. I've been sitting there with an investor. I've given them a copy of my model, and they literally will just pull up what to me looks like a random cell. Like, hey, let's go to column AA, row 52. Can you explain why that number is there? And they're not doing that to try and trick me. They're doing that because they saw something in that number and they are confused. And I, as CEO and founder of the company, have to be able to answer that question for every single cell in the entire spreadsheet. And so I need to know how every formula works. I need to know why every number was put in there. So if I have a co-founder who's the financial person, that's nice. You can sit with that person to create your financial model. But if you're the CEO, you need to know what every number is in your forward-looking model and why. Every number.
So I have a few questions that are in the chat that are cool. I don't know if you've seen them, and also want to remind people to fill out that survey. We've got 35 people who filled it out, but having more people would be great. So take a second to look in the chat box for the link, which I just put right now. One of the questions, I think maybe we could invite, if Abraham Solomon would like to read off his general question, that would be fantastic. Abraham, are you available?
Yeah. Okay, the question I typed is a bit long, but basically it goes to the cyclicality of agriculture. Oftentimes you'll have, sorry, there's a reverb. Oftentimes you'll have maybe one season of the year, whether you're selling seedlings or you have a harvest season where you have revenues, and other times you don't. So you're doing operations the whole year, and it only reflects maybe during one period of a year. So you don't have this continuous feedback that you might have with other kinds of businesses. So it requires you to have a prediction of what's going to happen based on your changes in operations. And this is much more about understanding the business, not through the numbers, but through knowing your customers and understanding the region and things like that. So I just wanted to find out, if you have a business which doesn't have this very quick response time, how would you go about that?
Yeah, so I run a business like that. I run accelerators. We don't run all year round. We run one in Seattle per year. So I have the same kind of seasonal operations. It's really busy for a few months a year, and then I have to do other things for the rest of the year to keep busy. We have a flurry of activity in terms of investments that come in and out, and then it slows down the rest of the year. This is very common. We just call it a seasonal business. It doesn't change what you have to do in terms of accounting and financial modeling. It just changes the fact that, not every month is going to be exactly the same. In the long run, what you want to be able to do is comparisons from year to year. A very useful set of financial reports for a company that's been around for 3 or 4 years is your comparison year over year. What did May look like this year versus May of last year? What did Q1 of this year look like versus Q1 of last year? And learn off of the year-to-year changes. It does mean that your learning cycle is way slower than a company that's not seasonal, and it may mean that you need to find something to not just keep busy, but you may need to find something that's generating revenue in the off season, so that you can A, experiment and learn faster, and B, thrive and make growth happen when the harvest isn't coming in.
Thanks. I also saw Bernard has a question. Bernard, would you like to ask your question if you're available to unmute yourself? Let's see if you can. If you can't, oh, looks like he is.
My
Great.
question is, to understand all this, the first part was a bit easy, but as it goes, it became complicated for me. To understand, do you have to employ an accountant? And if we have issues, suppose we start practicing it and we have issues, can we be able to come back to you and ask some questions?
You can always try and ask me questions. Go use the central system. I keep forgetting the name of the system, Amanda.
Yes, Mighty Network. So yes, that's a really great reminder, is anything we don't have time to answer today, or any questions that ever come up throughout the week, you're going to go to Mighty Networks to the section called topics. We've got a topic there called questions, and you can put your questions in there, and we're monitoring that to get responses.
Do it there for 2 reasons. One, that way, first and foremost, everybody can see the question and the answer, because a lot of people are going to have the same questions. 2, to answer your question specifically, yes, you do need to hire someone who can do accounting. If it's not you, you need to hire someone to do that. In most countries I know of, you're required at some scale to have audited financials, which means you have to hire an accountant to do the audit. If you're not good at this at all, here's one solution for you. So again, something else to put in the chat window. This is a company based in Ghana. It's called Built Accounting. They have a lovely piece of software that's free. So anybody who wants to not use the spreadsheet path, but use a piece of software online in the cloud, you can go on here and you can, you don't even download the software. You just sign up and you have your ledger and your P&L and your other statements generated. Your ledger you put in yourself. It also does invoices. And if you're in Ghana or Nigeria, does payroll, and they're expanding that, and they'll do that in more countries. Full disclosure is they're a graduate of the Fledged program, and we invested in them on purpose because this is such an important problem. And if you want more, like you want an accountant or a bookkeeper, you can hire through them. They have an army of accountants and bookkeepers. And again, they're based in Ghana.
Okay.
Oh, very exciting. Yeah, I'm getting the link as soon as I can find that. I saw Elizabeth had a question.
Hi, everybody. So I wanted to find out, how do you value a company for you to be able to know at what rate to grow in readiness for equity or debt?
We'll talk about valuations when we do the realities of funding in a few weeks. So
okay.
hold on that one.
Thank you. Okay.
Yeah, I have a question.
Yeah,
Can I go ahead?
Yes.
Go ahead.
Okay. My name is Princess Olayemi once again. we are planning to introduce production of plantain flour and plantain chips this year. So I want to know how we can use cash flow statements to have a financial plan of what the budget will be for the revenue and the expenditure. How it's going to help us to plan ahead.
Okay, so you used a lot of accounting jargon in that question. And the way you strung it together, I don't actually, I think what you really are asking is, how do I build a financial model? The way I would say it is, how do you build a financial model to predict what's going to happen this year? And that was that second, that I guess third half of my presentation today, where I started with units and unit price and revenues and so forth, all on one page, all the way down to the cash in the bank. So that is the format that I like to see for a forward-looking financial model. And you can use that format for the historic reports as well, but that's what you need to put together in order to try and figure out what you're going to do in 2021.
Okay, thank you.
Thanks, Fanny, for the comment. I see Elizabeth's hands up. Why don't we let Elizabeth go? Or you already went?
I think Elizabeth Sehi wants to go, and she's on mute right now. So I think Elizabeth Mwenda already went. Elizabeth Sehi. And we might need help from...
C'est vrai, merci pour le rappel. Alors, je disais que j'ai suivi de bout en bout cet exposé très édifiant, à travers lesquels, à partir des multiples tableaux qui nous ont été exposés, présentés, nous pouvons avoir une visibilité de l'entreprise et un meilleur suivi.
No, I'm good. I'm listening on English.
Mais alors, ils sont tellement nombreux que quel est le tableau que nous pouvons vraiment retenir pour une visibilité parfaite? Ça, c'est ma première question. Et ma deuxième question également repose sur le fait que nous avons beaucoup de projets à des tailles différentes. Et je suppose également qu'il doit également avoir des bailleurs de fonds à des tailles également différentes. J'entends par taille des plafonds pour lesquels ils peuvent se permettre de nous soutenir. C'est très important pour moi. Merci, c'était ça mes questions. Maintenant, je voulais également, je me posais la question de savoir, nous allons également aller à MyTNet pour voir par exemple comment ça se passe. Aller au Ghana pour avoir par exemple un relationnel avec les experts.
I can't keep three questions in my head. So the answer to the first question on which of these tables do you need to use, the answer is you need to use all of them. So you need to have good financials looking backwards, and you need to have good financials looking forwards. You need both. So sorry for those of you who don't like financials, but you need all of that, everything I just showed you. And then, and this is why I told you I can't do three questions, because I forgot the second one already. You have separate projects and different grant. Sometimes it's useful to have separate financials.
De certains bailleurs de fonds, le plafond.
I get off the interpretation here. So sometimes it's useful to have financials per project. Sometimes it's not. Sometimes you just need to have that revenue section at the top split into...
Luni, I accidentally muted you. I'm very sorry. I was trying to mute everybody else.
Okay.
Sorry.
So sometimes what you do is at the very top, instead of just units and average price and revenues, you have units of product A, average price of product A, revenues of product A, cost of goods of product A, net revenues of product A, and then you repeat units of product B, average price of product B, gross revenues of product B, cost of goods of product B, net revenues of product B, total net revenues. So sometimes you split it up that way, and that will help whoever's understanding your business understand the difference between the incomes of the two products, because the next block down is just your fixed expenses, the cost of running your company. Doesn't matter how many products you have. The whole idea of that block is That's just the cost of running your company. So you chose to have 2 products or 3 products or 5 products. Those fixed expenses are your fixed expenses. I've seen a lot of my investees have reports that look that complicated, and it's not terribly complicated. It's just a little bit taller. And again, when we talk about, we'll talk about sources of capital in another week.
I wanted to take this time before going perhaps to Isela to let everybody know the attendance sheet has been put into the chat box. So everybody take a look there, click on it and go for it. And also, before we get to Isela, I'll just take the moment to share the results from our interesting poll that we did earlier today. So let me pull that up. And I think you can all see it now. Let me see, I want to make it presentation mode. But basically, you can hear already that most people are taking care of their financial records. We see 24 people are doing it themselves, that we had 61 people vote. So thank you for voting. And if now you still actually want to vote, you can still vote and you'll see your votes coming in. I just need 1 second to put the chat box there one more time. Here, vote one more time if you still want your vote to show up. And then we see that there's just 12 people who haven't yet started, but they feel like the presentation will help them. We also see some people are doing it themselves. They also might have an external accountant, or they might have a staff member on their team that does the financial records. So I wonder, Luni, if you have any comments you might want to share on these results.
My guess is not all 24 of those people are actually getting all the way to a useful panel of
I have to mute everybody. Luni, I'm gonna mute everybody. So,
yes. So my guess from my experience is that yes, 24 people think they're doing it themselves, but some subset of that 24, not all 24, but some of those 24 people don't actually have a financial report at the end of the day. They just have their ledger that they hand to an accountant once a year.
What might you suggest for some of the people who are trying their best to do it themselves? Do you have any tips?
You got to just make it. I like numbers, so I have a hard time relating to people who are afraid of numbers and spreadsheets. So I have a degree in mathematics. I really like numbers. If you just make it a habit, it's just something you do every day, then you'll start to see some patterns, and you'll see patterns that help you figure out how to make your business stronger. Ultimately, that's all. The whole purpose of this is just to find out, what's going well in your business, what's not going well in your business in terms of money, so that you have more money in the bank at the end of each year instead of less. Right?
I would say, just from my point of view, I have my own business and I finally got to keeping records. And what did it for me was partnering with an organization like Built Accounting. So I might want to suggest that for anyone who thinks they could improve their financial records, that might be a good way to go. So that's maybe my suggestion there. I want to move to maybe the next slide. Let me see if I can get there. How much has this presentation helped you gain confidence in your business's financials? So Luni, looks like a lot of people were helped. We got one person who's more confused, and we definitely understand.
Watch it again. Hopefully it'll help the second time. If not, there's a ton of good videos on YouTube for accounting.
And then I got one more question, which was just, how are people feeling after seeing this presentation on financial models? I think we've got a lot of words there. I can see motivated, great, good, hopeful. I saw one in there that said, this was not too complicated. That made me laugh. Useful.
Nice.
Cool.
Just wait. I think the next one we're doing is the realities of funding, and it'll be the complete opposite, and everyone will be depressed.
Okay, we'll do a word cloud next time on that one too. So I'll stop sharing this. And I saw we still do officially have about 20 minutes left for Q&A. So as long as the questions keep being interesting, I think we can take them. Yeah.
Yeah, I saw a few pop in. Solomon asked, where do we record the loans in and out? Technically, I do it wrong. So I do it at the very bottom in that section about investor money. And I'll have a line for loans in and a separate line underneath it for loans out. And I might even have a third, I may split that into 3 lines. I may have loans in, interest out, and principal repaid. Technically, you're supposed to put the interest up in fixed expenses. Technically, that is a fixed expense. I just like to stick all the stuff together that has to do with money in and out to investors or banks or grantors. I like to have it all in one spot so I can just see what the change is in that section. And so there are rules for how you do accounting, international rules. I forget the acronym, and they'll tell you that interest expenses go in the fixed expenses, but not the principal, because more complications. So if somebody lends you $10,000 and you pay them a payment of, let's say, $3,000 in your payment, well, some of that payment might be the original $10,000 back, the principal, and some of it might be the interest. And you need to distinguish between the two. Right. You got to pay. The way debt works is you pay them back whatever they gave you plus more. The more is the profits on the loan or the interest on the loan. So it goes somewhere different. Amadou asked, can you explain the break-even point? Yeah, on the forward-looking financials, the break-even point is the time period. I keep saying time period. You typically do the forward-looking financials as months for a year, and then quarters after that. So the time period might shift between columns, but the break-even point is whichever column the cash stops going down. So whenever the net cash turns from negative to positive is the time period when you finally broke even. It could be, you could think of it as a higher number up there. It could be your gross, your operating profit line, what I call net income line. You could say whenever that's positive, that's your break-even point. But if you are making capital expenses after that, if you absolutely can't run your company without a truck, and I just use truck because it's really common expense. Like if you absolutely need a truck, you're not breaking even until you've bought the truck. So one of those lines that's computing a net, when it turns positive, you're past break even. And clearly, if your cash in the bank is going up, then you're doing well. That's ultimately what you want to know. You want to know how much money is in the bank now, how much money will be in the bank in 3 months, and 6 months, and 9 months, and 12 months, in 2 years, and ideally it keeps getting bigger.
Luni, quick question for me. Are the slides you presented today the same ones you sent me last week?
Yeah.
Okay, perfect. So I'll have those slides, just to let everybody know, I'll have those slides updated to Mighty Networks. I did see a few questions about how to find Mighty Networks still, which is okay. The great thing is I sent you a few calendar reminders to remind you to join this event today. And in those calendar reminders, which should be in your email or in your calendar, you can find the links to join Mighty Networks and the instructions to do so. So we'll have the recording up there a little later today, as well as the slides and some notes. I've already been taking notes this whole time, so that should be very useful.
Okay. Isella's hand is up and she has a question in the chat.
Yeah, Isella? Isella, would you like to go?
Yes, yeah. I'm just scrolling up in the chat so I can find my question and just read it out. In the example that Luni gave of the bad profit and loss account, he said that the cost for marketing and branding should have been per unit. But in that particular profit and loss statement, I didn't see any part of unit sales expressed. So does that mean that in your preferred profit and loss account, your inventory must always find its way into it so that there's an expression per unit. I think that part you later answered. But sometimes the price per unit varies. I mean, what you sell it at varies depending on who you're selling to, whether it's an individual or a supermarket or another distributor kind of thing. So breaking it up into units, especially when it comes to the cost of marketing and branding, may be a little bit different.
Okay. So first off, you I either misstated or you misunderstood what I meant about the marketing branding. That section of that report was supposed to be cost of goods. Or it said it was cost of goods. And cost of goods, what goes into the section of cost of goods is only the things that are per unit. So because marketing and branding isn't per unit, it didn't belong in there. It belonged down in that line item belonged down in fixed expenses. So it was just a misplaced expense line. Yes, you should see ideally how many units were sold in your report. It might be just be more complicated. It might be that you have a total number of units sold different from a total number of units created. And then the difference is inventory. So one way to calculate that and compute that is to have separate number of units for revenues versus cost of goods or cost of sales. There's other ways to do it, but that's one way to do it. But you do have to have, if you have created more units than you have sold, yeah, you need to account for that somewhere. The word accounting just is the active verb for account, or the active noun for accounting for what's going on in your business. So yeah, inventories has to be accounted for. And then you kind of had a second question in there as well, which is basically what happens if you have a bunch of different prices that you charge. And the answer is what you want to put in your report is the average price. Unless it's so important that you need to report two separate prices or a bunch of different prices. So for example, there's a company in Ethiopia I invested in called Obama Stove. They're the largest cook stove company in Ethiopia. And they create 3 different stoves. One small for making coffee, one medium, which is the normal one you put the pot on and cook dinner on. And then a large one that they sell to the coffee growers right after coffee growing season because it's prestigious because it's bigger. So they charge more for it. So they're small, medium, and large. We don't report on small, medium, and large. It's just not, there's not enough small and enough large to care. We just show total units and the average price per unit. But if it was important, then we would again split up the section of the P&L. So it would be total small, total medium, total large, average small price, average medium price, average large price, average price, total revenues. Or we may split it up, like I said before, with separate revenues and cost of goods for small and medium and large. Right? It really just depends on what's important for you to track for your company to optimize what you do. Right? How you choose to split this up depends on how you run your company. There is no one right answer.
And I saw Parfait with her hand up, and I'm not sure if we spoke with her already. And then Dr. Afolabi, I think, was also having a question.
Okay, I'm in the English translation for Parfait.
Parfait, would you like to go?
Yes. Oui, donc ma question est donc la suivante. Je ne sais pas si on a parlé donc des amortissements pour les entreprises qui donc utilisent des équipements pour la production. Donc je voudrais savoir la place où donc on met donc les amortissements dans le business plan. C'est ça ma question.
Good question. Okay. So you may have heard this word or may not, called depreciation or amortization. And the answer is that's for the accountants to work on. That has nothing to do with running your company. That's the short answer. The longer answer is there's two ways to do accounting. One way is called cash accounting. Cash accounting is when you keep track of the cash. And the other way is called accrual accounting. I'll type it in the accrual so you can see the word. Accrual accounting is where you try and take into the account the fact that that piece of equipment you bought will last for a while, and you want to know how long and account for it, whatnot. As early stage entrepreneurs, don't try and do accrual accounting. If it's required by tax law, then go ahead, let the accountant do it. Oh, sorry, I misspelled it. You should just worry about cash accounting. And in cash accounting, there is no depreciation. So in a cash accounting, if you buy a truck and it costs you the equivalent of 40,000 US dollars, then you book it in the system as 40,000 US dollars. It costs you, 10 million shillings, it's 10 million shillings. Cost you, a million naira was a million naira. Doesn't matter. Whatever that cost was, it gets put in the accounting as that cost. And in that month where it happened, or the quarter when it happened, and you don't have to worry about doing anything else past that, right? For the lifetime of the machine. Same thing for all your other equipment you bought. The reason why it's really important to do cash accounting is because all you have to run your company is cash. You need to not run out of cash. If you have $0 in the bank account, you're done. Your company has to shut down. And in accrual accounting, what they would do for that truck is they would say, well, the truck is going to last for 5 years. And so we're not going to book the full value of the truck now. We're going to book the truck over a 5-year period. And we're going to depreciate, is the term they use. We're going to depreciate the value over 5 years. Well, I'll tell you, no banker is going to let you deposit depreciation. It's not money. It doesn't have any actual value for you to run your company. And the accountant, when they do accrual accounting with this truck, isn't going to take the full $40,000 or 10 million naira or whatever out of your account, out of your accounting account when you buy that truck. And so once you start doing accrual accounting, you don't know how much money's in your bank. There's no way to compute it because it's mixed in with this whole idea of amortizing costs over time. So leave that to the accountants and just stick with cash accounting. Thank you for that question.
Okay. Thank you, Amada. Thank you very much for the opportunity. Luni, I appreciate. I think you are a father of a business accounting. The lecture was very so insightful, informative, and helpful. I have just one question, sir. For those of us that we have about 250,000 balances size, and they want to scale up of our production process. And in Nigeria, for instance, when you go to bank, they ask you that you should bring out your plan. Sir, I want to find out from you that which options out of these cash flow techniques will you advise us to use when we are preparing for something of that nature for the loan? Do we need to use a cash management plan, or do you advise us to use cash flow projection?
Okay, so first and foremost, banks don't like to lend money to small businesses anywhere in the world. We'll get to that when the reality of funding. So you're welcome to go to a bank and go through their whole process, but unless you are going to sign a personal guarantee or sign over your house as collateral, you're probably not going to get a loan from them. They're going to expect all of the all the historic financial reports that I showed you. So they're going to expect P&Ls and a balance sheet and cash flow statements for the entire lifetime of your company. And they won't see any reason why you don't have it for the entire, since incorporating your company till today. Those are the three that they're going to expect. And then, yes, they're going to ask you for a financial model is again the word we usually use for that. And that financial model that they're going to expect is probably going to look out at least 3 years. And again, monthly for the next year, quarterly for the 2 years after that. You might get a banker that's fine with just seeing the next year if it's a short-term loan. But if it's a piece of equipment, if it's an equipment loan, if the ask is to use the money for equipment, then pretty much you're going to need the financial model out for a few years just to show them that it's profitable. Because the equipment loans, the length of the loan will depend on what the use of funds is. If you're just borrowing money because you got an order that you want to fill and you're going to get paid in 60 days, that's a different story than if you're borrowing money to go get a truck or a piece of equipment to go grow your company, and that piece of equipment is going to be around for 3, 4, 5 years. Then the loan will be for 3, 4, or 5 years. But everything I just showed you today will be expected by them.
Thank you very much.
Well, I think that, we're about 5 minutes out, and I wanted to just make sure everybody had a chance to work on the attendance sheet. So I'm going to throw that in one more time because that's very important to many people. And I saw a bunch of people had actually already filled that out. Let me see how many I've got so far. I think it's just interesting to see 70 people so far. So I think there's a few more people who are online who haven't had a chance to do that yet. So wanted to make sure everyone had a chance. Another thing that I wanted to share with everybody is some people are seeking, assistance with their homework. They're actually doing it, and we've gotten a lot of questions. How can I get feedback on this, or where should I submit it? So for most folks, this homework is for your benefit only. So this is an optional way for you to submit documents. So we're calling it the document portal. And so we're going to list this on Mighty Networks as well. But if anybody wants to go ahead and look it up, open it up, it's just a really simple portal where you can upload a document. And so, for instance, anything you might have wanted to work on this time, from if you wrote down some of your ideas for experimentations and innovations, if you wanted to not ask any questions, but if you wanted to work on your financial plan or model right now and upload that as an Excel sheet, you're definitely able to. So this is an optional portal for you to upload documents to get feedback. Eventually, we can use it to upload if you have slide presentation slides you're working on, slide deck, you can upload that for any kind of feedback as well. So it's just a simple place for you to send information for us to start a basic conversation. The other thing it could be used for is if you missed a class, we are making the homework we're making the homework assignment mandatory. So then if you missed a class, then you can upload it there, indicate that it was a part of the class you missed, and we'll be able to take it over and then count your assignment if you needed to miss that class. So there's a document portal. That's a little bit about it. We'll be announcing it on Mighty Networks so no one loses it also. Let me see. Luni or Samuel, this could be a second for some closing thoughts as well. Luni, would you have anything to say?
I was surprised by the poll at how many people are doing this. Just given my experience, I would have expected to be more like half, but hopefully this still showed you some things you hadn't seen before. And I know my extended P&L is something almost no one's seen before. So hopefully that's helpful.
And I really like the one page. Is that what you're talking about?
Yeah.
The Luni one page of financials?
One page financial report, which is what I really do for my businesses. I don't just teach this, I actually use it.
And actually, when you make that one page, do you find that investors or other banks or partners really appreciate it?
What you'll find is that most investors don't do finances either. So they don't know it's an odd report. They don't know it's not standard. They just appreciate the fact that I can start at the top of the document and work my way all the way down and explain everything that's needed. So it's all in one place. I don't have to bounce between 3 reports. Like everything they need is all sitting on one page. So It's really rare when I get someone who knows accounting and says, this, I don't understand why this is here. Why isn't this on the cash flow statement? I think I've heard that once in 10 years.
So it can be used as a guide for a conversation when you're actually speaking with a potential funder or partner.
Yeah.
All right, great. So I think it seems pretty easy to make as well. Once you've done the hard work of getting your financials together, it's really just bringing some of those key numbers.
And it's not hard work. It's just boring, right? It's not hard at all. It's just a matter of putting every transaction one by one into a spreadsheet. It's boring as hell. I don't like doing it either, but it's useful. I like the output. I don't like the actual process of doing it.
And one other announcement I want to share for the French speakers, we are working on translating the presentations to French. So as soon as we get those, we'll be posting them as well on Mighty Networks, and everyone will get a little announcement as well. So we'll be having those on Mighty Networks quite soon. We want to thank Michel, our kind. I think many folks are going to get to know his voice throughout this program. So wanted to say thank you to Michelle, who is joining us as our translator. Thank you. And then Samuel, would you have any closing remarks?
Amanda.
Yes, thank you. Thank you so much, Luni, for the session. Equally, I've learned a lot by fact that I'm equally an accountant, but I can be able to relate with what you are speaking about, and especially contextualizing it to entrepreneurs, making their life simple. So thank you so much for that. So just in case anyone has a question, let's meet on the Mighty Network. Just a kind reminder that we'll be having a working hour on Thursday from 6 to 7 East Africa time. So feel free to join. We'll be doing, or we'll be deep diving more on this topic and more other discussion. Thank you.
Yes, so if anybody wants to bring some of Luni's template that they've been working on, we can look over that on a group basis as well. So go ahead and get started on some of those templates if it's useful to you, or bring additional questions. And we're very thankful for Samuel's background in accounting, who's going to be well positioned to discuss with you on Thursday. And next week, we're having a session with many of our entrepreneurs, our alumni. So I believe 7 of them have committed to coming next week. So this is going to be a great, I see Teko's hand. This is going to be a great chance to hear from some of the folks who've participated last year, what kind of growth or challenges they've had over the past 1 or 2 years as well. So it'll be a cool opportunity to learn about a lot of different business models and get inspiration on how you might be able to improve your own business model. I've seen a few questions in Mighty Networks, such as, should I have more than one product or should I focus? And we can discuss some of those questions with the different entrepreneurs. Teko, would you like to go ahead?
Thank you, Amanda, and thank you, Luni, for an insightful lesson. I know some of the folks had written to me to ask me in connection with the books. We are sorting out some paperwork from the office, and soon we'll be able to advise about those publications. It's in reference to Luni's authored books. And then on the 4th of June, we have on National Geographic and National Net Geo World, National Geographic World, the AFR 100 documentary film, The Great African Green Up, will air at 6 o'clock Central African time, 7 o'clock East African time, and I guess it's 5 o'clock West African time. So be sure not to miss it. Thank you very much.
We'll get some links out for that as well. So I'll speak with Will at our office to get some of those links out. And Teko, I think we can also share the link for the, for the meeting we're having next week. Would I be able to share those links later, Teko?
Yes, I'll share the link to the session for the Land Accelerator at the AFR 100 partnership meeting that is taking place in Kigali Rwanda?
Sure.
Thank you.
Yes, so we're doing a hybrid approach. We're having a meeting in Rwanda and we're also live streaming it. We're focusing on some of the Land Accelerator alumni as well. So anyone who wants to join, it's going to be next week and we'll be sending you links as well. It's going to be on the 27th. So we'll send you links if you can make it join. It's going to be free, of course, and optional to join, but you might be able to see different folks who are joining in for that meeting. Thanks, Teiko. We'll get that out to all our folks. Okay, I think that's all for now. See you on Thursday if you want to practice more of your finances. Thanks to Luni. I think everybody is grateful. And we'll look forward to seeing you next week to meet 7 of our alumni. Thank you.
Yeah. Thank you.
Thank you.
Thank you, Amanda.
Goodbye,
Amanda.
everybody.
Bye.
Amanda, thank you very much. Luni, very well. Thank you.
Thank you.
Bye. Thank you very much.
Thank you very much. Bye-bye.
Mr. Samuel Kabiru, thank you very much, sir.